So is panic over the so-called end of Fed independence really warranted? Joining me now is David Malpass, former president of the World Bank. Good to see you, David. Thanks for being here. You know, you and I used to cover Latin America quite a bit together, and we always would see these countries, these banana republics, where the president would come in, take over the central bank, and play with it like it was a toy, essentially. So there are genuine concerns about its takeover, but I'm just wondering whether or not the Fed is in more danger of losing confidence because of its incompetence. I mean, what it has done in terms of bad predictions, what it has done in terms of looking like politicking just before the last election, what it's done with regard to certain stats that it's come out and mismanagement, including the Taj Mahal they're building. I mean, would they really want to hold on to Lisa Cook when they already are seen pretty poorly by the general public?
Hi, David. Money is really important. It's important to people in terms of their wages, in terms of their affordability, in terms of mortgage rates. And so when central banks go way astray, that's a big problem for the strength of a democracy. So I think it's really important that we keep our eye on what is going on right now. The Fed has used models that lead them to the wrong interest rate. Also, the Fed needs to, yes, and its people need to have very high ethical standards, and because of the trust issue that they need to inspire. Look, the U.S. is trying to roll over this gigantic national debt, and so you need confidence in the officials that are setting the interest rates. I've argued that the Fed does too many things, that it should be smaller, that it shouldn't be as arrogant in terms of the way it thinks it knows what the interest rate is for this giant economy. And above all, I think the rate is too high right now, given what's going on in the economy. So all of these are arguments for major reform at the Fed, and they're resisting it just like many other parts of the government are resisting that kind of change.
It's also important what the world thinks of whether they have confidence in the United States and our monetary policies. I'm just wondering, do you think, as former World Bank president, I mean, do you look around and see any loss of confidence in the Fed from other central banks around the world?
One problem is central banking, I think, is in a shambles worldwide, and that's because they're all using similar models, and they don't work very well in terms of forecasting inflation and in terms of setting interest rates. So I don't think we should look to the global opinion on this. It should be a coherent monetary policy within the U.S. that allows growth. Look, one of the things the Fed does is still thinks in terms of there being a potential GDP, a speed limit, or for the U.S. Well, that's not a good model, and it doesn't work when you're adding productivity and you're adding energy reforms that are really powerful. How the Fed's going to be leaning against President Trump's policies, and I think there are legitimate major problems with the setting of interest rates, and then also this issue of ethical standards needing to be particularly high. The Fed has a couple strikes against it because of what was done during COVID. It was I think highly politicized on a number of fronts, and so that's one of the things.
And just to be clear of what you're talking about, you mean the essential monetization of all those billions and trillions of dollars is added up. They just monetized money, and of course it all led to that, and a couple of new policies from the Biden administration led to an increase in inflation.
They were silent on whether lots and lots of government spending, wasteful spending, was going to be inflationary. They should have spoken up on that. But I mean also the timing of the interest rate cuts going into the 2024 election. That was suspect. And one of the major things was their decisions at various times to buy bonds. And so when you do that, you artificially lower the mortgage rate during the election cycle. And I think there has to be really a guarding or an improvement in the way the models work in terms of the timing of that. And that could be done by the Fed having standards that are really more consistent with the dual mandate. You know, the Fed has a pretty clear guidance from Congress on what it's supposed to do. It just hasn't been fulfilling that.
You know, you mentioned the 2024 election move, or the move right before the election, where they lowered rates. So a lot of people say it was the political inclination of Powell trying to please the sitting president. And what was fascinating about that was the real market, the market trades that you look at the yield on the 10-year and everything, it went in exactly the opposite direction. You know that our friend Steve Forbes wants to eliminate that, essentially let the market decide interest rates. Is what we saw right before the 2024 election an example of why that authority should be removed from the Fed?
It's important that the duration of the debt not be politicized. Treasury did it before the election by shortening the maturities, and so now we're paying for that, and the Fed was participating in that. So I think that neither should be influencing the markets during elections. David, you know, the government is spending huge amounts of money. It's been very hard to stop that, and so as you look ahead, that's going to weigh on the whole economy, the amount of debt that was left over in the short term of that debt, and so this is something that has to be done very carefully. Lots of trust from global investors. I think that can be reacquired by the U.S. Through very clear communication that the Fed is following a dual mandate and being successful at that rather than these repeated failures on inflation.
Yeah. Very, very quickly, these threats to turn up the tariff heat on Europeans from the president unless they back off on their overtaxation, overregulation of our tech companies. What do you make of that?
You have to play hardball, and the mistakes are huge in Europe. Their markets are closed, and in India. And so as the president tries to negotiate on this, or is negotiating on this, he's winning a lot of market opening, and I think that will benefit the whole world as it occurs. Now, in doing it, you know, there's going to be lots of mainstream media that are saying why that's not a good idea. In general, they often think change is not good, but what I think needs to be done is massive change throughout the government, including the Federal Reserve, that will allow faster growth for the U.S., higher median incomes, more manufacturing, more energy. All of those are needing. There has to be change in the deep state in order to allow that to happen.
Yeah, and it's not a bad thing. It doesn't automatically increase inflation, as too many economists inside the Fed believe. David Malpass, great. Go ahead.
I was going to say they still think growth causes inflation and high interest rates solve inflation. Neither of those models are right, nor the Phillips curve. So there's a whole list that need to be reformed.
Absolutely. David Malpass, good to see you, my friend. Thank you very much. Appreciate you coming in.